Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
Are you there? It's your boy. No, sorry, it's your daddy, Mr. Macaroni. Keep watching Crypto TV Plus if you want to be doing well, especially. You get me now? Alright, you're doing well.
Hello and welcome to the program. This is Inside Blockchain Live on Crypto TV Plus. My name is Fintech. It's another Monday morning. If this is your first time on the show, do to follow us on all our social media platforms and subscribe to our YouTube channel at Crypto TV Plus. Click on the bell icon to stay updated whenever I release a new video. Now, over the years, the need to facilitate users' access to fast and transparent financial services have led to the emergence of multiple models and technologies. The fintech industry and the blockchain technology space is taking traditional banking to the next level in offering an array of seamless financial transactions and providing good customer service. In developing strong financial economies, there's a need to build and sustain the growth of fintech projects and bridge these projects on the blockchain to optimize the solution the disrupting technology can offer. Today, we'll be discussing building sustainable fintech projects on the blockchain. But before we get into the conversation, let's go on a quick break. We'll be right back.
Supporting your country in the World Cup is super fun. So, how about you support them and earn money in the process? Join me every World Cup match day on Sports Fusion, where we talk about everything World Cup and give out cryptocurrency goodies.
Sports Fusion, where crypto meets sports.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency, only on Crypto TV Plus.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back, everyone tuning in from around the world. I am Faith Aquari. You're watching Inside Blockchain. If this is your first time on the show, do to follow us on all our social media platforms and subscribe to our YouTube channel at Crypto TV Plus. Click on the bell icon to stay updated whenever I release a new video. Now, today we will be discussing building sustainable fintech projects on the blockchain. To join in the conversation is a fintech industry value creator, sales growth, and business development, and also a blockchain enthusiast, Jeffrey Williams. Adam, how are you doing today?
I'm fine, thank you.
It feels great to have you in the studio today.
It's an honor to be here.
So before we get into the meat of the conversation, how's your journey been in the fintech industry, and how did you get in contact with blockchain technology?
Okay, it's a good question. I get to ask that a lot. So
Yeah.
I've been in the tech industry, the fintech industry, since 2011. So that would be about 11 years.
Amazing.
And in that 11 years, I've worked with 3 fintech companies, the biggest being InterSwitch and the longest being InterSwitch. And it was there that a blockchain project was started a couple of years back. And that was how I got into blockchain and got to understand what the blockchain technology was about. And I think there was a couple of projects trying to develop digital ledger. I wasn't directly involved, but because I'm an enthusiast, I went there to find out what this is about. My major part of my journey was more around payments in tech. But now everybody's talking about blockchain. And that's why we're here.
Amazing, amazing. We have seen exponential growth in the fintech industry, especially in Nigeria. In your opinion, what has contributed to this rate of expansion, of the fintech industry in Nigeria?
I would say three things. The first is the support of the government, because they've been able to build and produce and deploy and enforce the right kind of policies that creates opportunities. At first, because of lack of knowledge, we may not understand it. And because most people might not really read into it and ask the right questions, they might find it a bit hard or restrictive. But if we look around us today, the multiple players, the growth we've seen over the last 5 years, it's all coming from the fact that somebody's enabling the sector or the industry to thrive, right? The second as well is the evolution of consumers and what they like. So what we find is we have a very advanced commerce system here in Nigeria compared to other African countries. And so our general consumers are very knowledgeable. They know what they want, they know how they want it.
And they get it, and they go for it.
And they go for what they want. And because we have an enlightened consumer pool, you find that the need for them to be more comfortable around how to do transaction is creating the need to develop the right products to support that need that they are creating. And of course, payments cannot be completed without the person who is selling. And so if you look at the market today, we have a very evolved market as well. And so the merchants who are...
And a big one at that.
Yes, so the merchants who want to do business know what they want, the experience they want to give to their customers. And because of the need for that experience, it's creating a gap that these fintech companies are satisfying today. Without the need of the merchant and without the consumer journey and the need to be comfortable in the way you spend money, then this technology will be irrelevant, right? And that's why I see huge adoption around this. So taking case the wallet system, we've seen tremendous growth. We have roughly about 25 million people who have wallet accounts in Nigeria. And that potentially creates new opportunity for future development in tech as well. Now, the third reason is that there is money there.
We can't take that out. There's money there.
And the reason why there's money there is because Nigerians like to spend. You know, we like to spend, and we're very emotional people. When we're happy, we spend, especially the men. When we are sad, we spend, especially the women. And so because of that, you find that at every given time, there is always the need to spend. And the banking system has made that possible, which means that they've mandated that for every account that you have a card. And they've created mobile banking applications, which is default.
Makes it very easier.
I don't remember the last time I was at a banking building to do any transaction.
I was at one point when they took out money from my account and I went in to act in a certain kind of way. I'm sure you guys want to do that. So you can
but you didn't go for an actual transaction.
Yes, for an actual transaction.
Complaint.
Yes.
So majority of the transactions that we do today, we do it at the convenience of our homes, while we're driving, even anywhere in the world. You can do your banking. It is this kind of infrastructure, technology, and availability of these things that make the fintech industry thrive, because there is so much you want to do around what is already existing today.
Amazing. Artificial intelligence, cloud computing, and big data are all key areas of the fintech model. Now, how does blockchain come into this equation? What is the relationship between finance technology, innovation, and the blockchain technology? We actually have DeFi and the blockchain, which is decentralized finance. And I think the only difference between DeFi and fintech is, the concentration of power. There's a centralized model when it comes to fintech, and there's a decentralized model when it comes to DeFi. So let me understand where this relationship comes in and where it starts from.
Okay. Fintech is like the older brother of
DeFi.
Of that. Fintech has built its infrastructure based on the pioneer of payments, and this is the card schemes, Visa, MasterCard, Verve, and the rest. They've built infrastructure that enabled banking systems to offer digital products or digital payments services, like having your card and being able to go to a POS terminal, an ATM, or e-commerce as well. Now, because of that centralized architecture, right, there is a lot of time that this requires. There's a lot of third parties inside that whole ecosystem. You can't run a business in today's fintech without having 3, 4, 5 people to share that money with today. And this is how it has worked, and people have been happy with that. Right? Now, blockchain brings a bit of a lighter mix to that ecosystem, which is it kind of supports to refresh it, to make it more efficient, let me put it that way, by introducing certain technology capabilities that makes it better, easier, and more comfortable, and even cheaper as well. So you've mentioned the first part, which is it makes it transparent, so it decentralizes that infrastructure. So you don't have to wait for NIBS, who is a central body. You don't have to wait for a particular card scheme to process your transaction. Everybody and every node can do that within the blockchain technology. And eventually, as the future evolves and people continue to build around the blockchain technology, we're going to have higher margin per transaction.
Yeah.
We're going to have less dependencies in that blockchain, in that value chain. We're going to have more specialized involvement that just because you give me one wire does not mean you need to be in there. You need to have a specific purpose within that, and that way we would find a bit more stickiness around that. Another part is also trustworthiness. You find that with today's technology, we still don't know who is who, right? Is what you claim is what it is, right? And we really also don't know what's going on within the transactions that you've made, right?
Yeah.
Who's processing, who is authorizing. If you created a website and it is porous, that is the weak link of that ecosystem. No matter how secure everything else is, your weakness would affect everyone else. But blockchain changes that. Everything you do stands on its own and can be revalidated across multiple connections, right? You will know where the transaction is at, where it's coming from, where it's going to, and if the value has been given to the person who requires it. Now, that is what makes the blockchain infusion into fintech interesting, because it just makes it better. It's not competing, it just makes it better. Another as well is that it enhances the slow process that we find today. Today, it takes you T+1 to get value. So if you bought something, if I bought something from you, it would take you the next day, maybe 12 o'clock, 2 o'clock to get value in your account, right? Now, blockchain gives you instant settlement. It takes away all of those in-betweens. Now, people are finding ways to implement that today and work around to get instant settlement, but that is for non-card, or they are finding other ways to circumvent that process. But still, the central infrastructure still gives you value, T+1. You know, blockchain improves the process of payment. And what happens when you have improved process? You save more, right? You make more money. You do not require as much amount of infrastructure and people to make things happen. So you run at a more lighter cost as a company as well. And that's what makes the blockchain interesting. And finally, you find that from a decentralized point of view, which is what you've mentioned earlier, this is one of the major reasons why sometimes you go to the supermarkets today and they say, oh, the POS is not working, and all the POSs in Nigeria are not working, and some are maybe working, and then everybody just blames one entity for it. If we apply blockchain technology, that would not happen, which means that Nigerians' payments infrastructure could be online 99.9% of the time around the year. Now we're going into the peak period, which means infrastructure, central infrastructures would have heavy impact. And if you have not optimized your system for the peak period that we're going into, what's going to happen?
There will be a consistent collapse
Of that system. And this is where blockchain enhances the fintech space.
Amazing, amazing. Just listening to you, outline these things just make me, feel very excited about being part of how or when the technology started and the process to which it's evolving to. I know it's just not part of it, but I just wanted to ask before we go on another quick break. We have the naira that just came out right now, and a lot of people are really bashing it. But just dip it into and bring it out. So I wanted to know, how do these affect the change, the design change? How does it affect the value of the currency in and out of the fintech space?
A lot of countries, apologies, have changed their currency. Not major changes. And there was a reason why this was done. People seem to forget why this was done and the benefit of it. Your money's value has not changed.
Will it change?
No, it has not changed. It will not change. 1,000 naira will not become 500 naira, right? However, one of the major reasons is because it helps to remove the money laundering, the stashing of cash. I mean, you saw all the news, all the pictures, and with the election coming up as well, the circulation of cash and all of that, it prevents all of that. So in effect, it's having a positive impact on what the politics is about to play out in a couple of weeks. It also has a lot to play out in redesigning and reappreciating your naira. It's brand new. Have you seen all the nairas these days? They are old and wrinkled. So having a new design just refreshes.
So there's no actual impact on the currency value.
There's nothing that it does. It's just to revamp the design so that we refresh the currency in circulation and clean out all the bad things that are happening in the dark, and make the light come out of what is
Jeffrey,
going on.
I'm sure you just broke some people's heart, and part of mine, you broke mine too.
Why? Why would you?
Because I was waiting for a bam boom to happen, and then whew, naira is now $1 to 1 naira. But we're going to get into that conversation probably in another time. Let's go on another break. When we come back, we'll continue the conversation. Don't go anywhere. I'll be right back.
Like it or not, Move to Earn have emerged in recent months, and what they do is they basically bring together elements of play to earn and fitness apps, mash it up and reward users for exercising, which is absolutely motivating and pretty cool if you ask me. Hey y'all, and welcome into the metaverse on Crypto TV Plus. Today's video will fit different, as we're going to be taking a portal into the iStep metaverse, so get fit and follow me. iStep is a lifestyle app on the Binance Smart Chain ecosystem.
Supporting your country in the World Cup is super fun. So, how about you support them and earn money in the process? Join me every World Cup match day and Sports Fusion, where we talk about everything World Cup and give out cryptocurrency goodies.
Sport Fusion, where crypto meets sports.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Crypto TV Plus.
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that dial. Peace.
Welcome back, everyone tuning in from around the world. I am Faith Ekwari, and I still have Jeffrey in the studio today talking about building a sustainable fintech project, or building sustainable fintech projects on the blockchain. And if this is your first time on the show, do well to follow us on all our social media platforms and subscribe to our YouTube channel at Crypto TV Plus. Also remember to click on the bell icon to stay updated whenever we release a new video. Now, Jeffrey, we have seen the emergence of a good number of fintech projects grow. However, very few of these projects have expanded from just the startup level to fully established entities. As an experienced fintech expert and business development strategist, what are some of the challenges startups are facing, and how can they use blockchain technology solutions in facilitating results?
Startups have various problems. Not everything can be solved by blockchain. So blockchain is not the messiah of fintech, right?
Okay.
Now, the challenges of startup would go from having the right funding, to having the right talent, to having the right niche that they want to address, to having the right technology and product fit to the market they are trying to go into, to enhancing and designing the right operating model to run the business and support the customers that they are targeting. These are all the various pillars that startups in the fintech space will need to look into if they want to succeed, right?
Yeah.
Now, blockchain is a technology. So immediately it would fall into the product and the technology part of the problem, right? Now, if we look at blockchain, what does it really solve? Blockchain allows you to have a cheaper model to run your business. So it means you don't need a lot of money to create the right product to start your business if you know what you're doing. There's a lot of ecosystems in blockchain that you can tap into right now. You don't need to recreate them to build value for the market and scale. The second part is that because blockchain is designed in such a way that it is decentralized, transparent, easy to implement on Web3, it makes it easy for people to not require a lot of resources, like people resources, to start your business. Unlike the typical fintech, you need like a massive team of operations people.
And that is part of some of the challenges that these fintech projects are facing.
You need to have funding to be able to secure the server that you need and pay annual maintenance and stuff on it, and all of that. You need to integrate to multiple people in order to run your business. The person processing card is not the person processing wallet. The person processing wallet is not the person processing USSD, and all of that put together. What makes it a more bulkier approach. What blockchain does is that it gives you a more cleaner slate to build on. So one of the major parts of payment is identity. Even with all the APIs and the development here, people are still falsifying. I could have multiple identities in multiple places and multiple cards in multiple bank accounts. One card will say Jeffrey Williams, another card will say Williams Jeffrey, another card will say Jeffrey Adam. Those are still things that exist today and makes the operational process of a startup really difficult. But blockchain creates a simple way to identify your customers so that you can reduce the time it takes to just validate the customer. So one of the beauty about running a business is to calculate the time it takes to acquire a customer, onboard the customer, set up the customer, and start making money. If that time takes 3 days, that's a lot for a startup. If that time takes 6 hours, I can start generating money in 6 hours. Now that will change the dynamics and the economics of business if you implement blockchain with that perspective in mind.
Amazing. And we have a lot of startups that take up to 5 days, 7 days to actually do. So there are a lot of problems there. And you talked about funding as one of the challenges that most startups face. Funding seems to be one of the biggest problems any project can face, especially when it comes to scaling the business. However, a good number of these projects still fail despite raising huge amounts of money. What are the key factors that can minimize this failure?
Anybody who is going into blockchain today, I can only say the future is promising. By industry evaluation, by 2028, I wonder how old I will be then. But 2028,
You'll be older.
will be older. They have evaluated that the blockchain market would be about, $34 billion, about that. And that means that you're not in the wrong path if you've already started implementing blockchain and you're already building your capacity around blockchain. However, if you want to succeed when you've raised money, there's a few things you need to look at. And I like to put it on 3 as well, because it's easy to remember 3 is like red, yellow, green kind of perspective. So the first is, people have not succeeded because when money comes, they change the goalposts.
Okay.
Wisdom comes when we have scarcity. Because you don't spend anyhow. You're like, okay, where do we need to spend money? What do we need to buy? Do we need this thing? Is this why we
There's a priority list,
yes. But when there's pepper and money is everywhere, what you find is that the wish list just appears. You want to upgrade, you want to buy this, you want to buy that. Unfortunately, you also want to change the direction of your company because there's now money. As if what you were going with before wasn't as important as now that money has come. That is why some fintechs or startups fail when they raise money. Number 2 is that you need to invest in people, right? When you have the right people on your team who have the experience, who have the talent, and who have the skills to do what they are meant to do, and you pay them to do the work. When you raise money, the experience that they have would mean that you would justify and spend that money rightly. Because if you don't have anything to offer, then you just have money to spend. That money will not have any impact because it's very easy to spend money. If I give you $10 million today, you'll be surprised in 1 year.
Give me first. Then let's see. Just give me first. Test me. Test me and see. But
so what you'll find that in 1 year, that money will be gone. Because the person who you have given the responsibility to administer that particular fund does not have the competencies to know what to do and where to invest or what to build or how to spend to do that. And what you find is over time, that money just disappears from you. And the third reason as well is people need to understand why they need money, right? So sometimes when I'm coaching people or doing business advisory, I tell people, why are you trying to raise money? And you find in the room, the kind of reason that people bring are not justifiable reason to go and raise money, right? So the follow-up question I ask people is, are you raising money because you want to scale to new market? Are you raising money because you want to optimize your operations so you can serve your customers better? Are you raising money because you want to build out a new technology and value offering along a certain technology trend so that you can maximize your offering in the market? You need to have a clear agenda while you are raising money. In the absence of a clear agenda is why people spend money lavishly or uncontrollably or without sense in the Nigerian context. And before you know, the money is gone, Benz everywhere, Banana Island, apartments everywhere, and then there is actually no value to the investor or even to the market that you're trying to go into. So for any startup that wants to succeed, within the management team, decide what is the reason why money is being sorted. And when money comes, ensure that the right people that have the competencies to solve that problem, plus the money that they now have, are available so that they can then utilize that funds appropriately, right? There are many models of raising or facilitating finance in a business. Raising money is one of them. There are other ways in which you can, maybe you want to buy devices. There's value financing, there's credit, there's a lot of other ways. But if you truly want to give up some of your equity to raise funds, then be pretty sure what you're doing or what you want from that.
Amazing. Lastly, before we go on another break, how can we build more sustainable fintech projects? You touched on, building or starting up, the project. How can we sustain this project over time, especially when it comes to the Web2 and also in onboarding users to the Web3?
Okay, well, sustainability requires a particular plan for sustainability. So I'll give you an instance. You want to build a farm and you want to operate a farm. To ensure that your farm succeed for the longer time, what would be the one place you would ensure that your farm is situated near?
A place that has water.
A water source. Why do you pick a water source? Because you want to sustain that farming business for a long period of time. Whether it is animal farming or crop farming, water is an essential part. For fintech, what is an essential part of sustainability? And I'm asking you questions now.
I don't know. Answer it.
It is understanding technology trends.
Okay.
We get all swallowed up in success that we forget that consumers and their needs are constantly changing. We forget that the market dynamics are changing. We forget that hundreds of new players are coming into the market. We forget that the global technology in itself is constantly changing, right? Any tech company that wants to succeed in Nigeria must constantly be attuned to what the trend is. And I'm not talking about just technology trend. I'm talking about technology as one, customer buying behavior as another, the businesses and their preferences and how they are structuring their businesses, how money is being circulated within the industry as well, what regulatory framework are being discussed before they are released and when they are released, and how that impacts your business as well, and what are the business models that exist today in the market, and how can you understand and compare that to what you're doing and be able to plot and say, if we don't readjust our business model, we may be out of the picture very soon.
So you have to leverage on, those existing.
So I'll give you one very clear one that killed a lot of e-commerce payment facilitators who are into the digital payment space in the last 10 years. It's that when we started the e-commerce business in Nigeria, people were charging money for you to get integrated. Sometimes they charge you 175, 150,000. Other players came into the same market and said, you know what? I will not charge you 150,000, so you can come on board because I have built an ecosystem that makes it easy for you to onboard without necessarily integrating. You just copy, you paste, and your website is ready. Mm-hmm. And how are they able to do that? Because they understand the new modern technologies that were coming. They were able to build around that new technology. They made it easier for customers to onboard, which eliminates the time and effort and resources that you require. They built an ecosystem that makes building technology and launching new products easier. So they went from a one-on-one product model to a more platform-based model. And that changed the landscape of e-commerce today. Now everybody has adopted that, but a lot of people who didn't change or are just way back, I don't want to mention some brand names, they all died or changed or lost out in the market, while newer ones are getting more customers and thriving over the long years.
Amazing. Thank you so much for joining us. Amazing. The future of tomorrow is already happening now. Thank you so much for tuning in on today's episode of the Inside Blockchain Show. I am Faith Ekwari, and I had Jeffrey in the studio today who explained better on how to build sustainable projects on the fintech industry and on the blockchain technology. And that will be all on today's program. You can get more market updates and other happenings captured within the world of blockchain and cryptocurrency on our website, cryptotvplus.com. Follow us on all our social media platforms at CryptoTV+ to get daily info on our programs. Thank you for staying with us. I am Faith Ekwari. I'll see you guys next week.